Hey there, welcome back to my channel, it's me the Mind Injector. In this video we have an intriguing story that has everyone talking. It's all about MULN Automotive and the recent proposal for a reverse stock split. Buckle up and get ready for some thrilling details. Before we dive into this video guys, I've got some exciting news for you. I want to introduce you to MULN Financial. They're offering an incredible deal for a limited time only. If you open a brokerage account with MULN and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth between $3 and $2,000. But that's not all. If you make a net deposit of $100 or more during the promotion period, you'll receive not just one, but 5 free stocks worth up to $2,000, plus free premium courses to help you sharpen your investing skills. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So don't miss out on this amazing opportunity to level up your investing game. Sign up for a MULN brokerage account today using the link in the description and start earning those free stocks. Now let's jump into the main content of this video. So, on June 13, MULN Automotive made a big move by releasing the proxy statement for their upcoming annual meeting of stockholders, scheduled for August 3. And in this filing, Proposal 3 caught our attention. It sought approval for a reverse stock split, which is quite common in the corporate world. But here's the twist. The proposed ratio was initially set between 1:2 and 1:10. Nothing too surprising, right? But hold on tight, because things are about to get really interesting. Just when we thought we had it all figured out, MULN Automotive turned the tables on us. They decided to lift the higher end of the reverse split ratio to an astounding 1:100. Yes, you heard it correctly. A reverse stock split with a ratio of 1:100. Now, that's something you don't see every day in the stock market. But why did they make such a bold move? Let's take a step back and examine this situation. You see, MULN stock needs to bridge the $1 threshold for 10 consecutive trading days in order to comply with Nasdaq's continued listing standards. Surprisingly, they've managed to achieve this milestone. Yet, despite their accomplishment, MULN Automotive finds itself on Nasdaq's non-compliant companies list. And to add to the confusion, the shares have once again fallen below the $1 mark by a wide margin. It's a head-scratcher, isn't it? Now, let's dive into Nasdaq's regulations and the complexities involved. In certain situations, Nasdaq may require a non-compliant company to trade above the $1 threshold for more than 10 consecutive days. Generally, this period ranges from 10 to 20 business days. The decision to extend the trading period beyond the initial 10 days depends on various factors, including compliance margin, trading volume, stock trend, and the market maker montage. It's a delicate balancing act between meeting the requirements and ensuring investor confidence. But here's where it gets even more intriguing. MULN Automotive's decision to initiate a reverse stock split with a ratio higher than 1:9 could potentially bring about some complications. According to Nasdaq's listing rule 5810, if a company fails to meet the continued listing requirement for minimum bid price and has implemented one or more reverse stock splits within the past 2 years with a cumulative ratio of 250 shares or more to 1, consequences come into play. These consequences could include being ineligible for a 180-day compliance period and receiving a staff delisting determination from the Listing Qualifications Department. It's a critical threshold that MULN is navigating. To put things into perspective, MULN Automotive already went through a 1:25 reverse stock split back in May. This means that if they were to proceed with a 1:10 split now, it would result in a cumulative ratio of 1:250. Essentially, the shares that were already split into 25 would undergo another split, but this time by a factor of 10. Now, While MULN would have the ability to carry out a 1 for 100 reverse stock split, there's a catch. If the shares were to fall back under $1 after the split, the company would not be eligible for another 180-day extension to regain compliance. This brings us to an important observation made by Nasdaq. They highlight that a series of reverse stock splits, especially following dilutive transactions, may have a negative impact on investor confidence in securities listed on Nasdaq. It's a valid concern, considering the potential consequences and the perception it creates in the market. Wow, what a roller coaster ride of twists and turns. MULN Automotive's decision to propose such a high reverse split ratio has certainly raised eyebrows. But what will be the outcome of this bold move? Will it lead them closer to compliance, or will it trigger a whole new set of challenges? Only time will tell. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like and leave a comment down below.